Hi, good afternoon, everyone. My name is Dalton. So I understand everyone is hungry, so I'll just keep it quick, 10 minutes, okay? So now, if after listening to 𝗍𝘃𝗀 sharing on the Japan story and as well as their fund, some of you may be looking to, invest in this using your cash account. Now, I'm just going to hold you right there because the next thing I'm going to propose is that you could consider financing this purchase using debt instead. That's correct, using borrow money to invest. Now, some of you are giving me dirty looks, as though as I'm saying it's a bad word. Now, let's think if leverage, is it truly a bad word? I think let's do a comparison between good debts and bad debts. Bad debts are the one that you commonly see, in the movies, whereby you borrow money, credit card bills, credit card loans, your personal loans, your payday loans, take the money to invest or, just go play on a casino machine and everything lose it all. So these are the tragedy happen. I think that's what you commonly see, right? But whereas good debts, on the other hand, are loans that could potentially generate a higher returns. Take one example that I think all Singaporeans may know, property. Taking on a mortgage loan to invest into as an investment property, and you get a rental income. If the rental income is able to cover your cost of borrowing, you are able to earn from the spread. Now, if you bring this into investment term, the concept is similar. So what I've just mentioned is actually a positive carry, where your investment returns are able to cover your cost of borrowing for you to be able to profit from this spread. Now, if let's say there's various types of positive carry. Let's say you may choose to invest in a US bond, paying 8% coupon yield. But if your cost of borrowing is 6.9%, are you able to get a meaningful spread from this 1.1%? Probably not. Again, if you are investing into REITs or stocks paying, let's say, 6.8%, but your cost of borrowing is already 5.5%. Again, your spread that you earn is kind of later. Now, if you are interested in a JPY fund, if you believe in, let's say, the 𝗍𝘃𝗀 fund and paying 7% dividend, especially the Japan Dividend Equity Fund, and your cost of borrowing is only 1.5%. Now, let me ask you, are you able to get a meaningful difference and profit from this net interest income? So, unlike bank loans that you may be familiar with, the ones that you take on a 1 month, 1 week loan tenor whereby you keep rolling on a basis. So this forces you to take a payout class, meaning you have to service your interest on a regular basis. For iFAST margin loans, there's no regular repayment obligation. That gives you the flexibility to choose your preferred dividend strategy. That means you can choose a reinvest share class for you to be able to get more aggressive and hence more potential capital appreciation. Okay, so let's do a simple illustration. Let's say currently you have $500,000 in your portfolio and you pledge into iFAST margin facility and of which we will apply a haircut to it. So from this collateral value, you can buy up to 3.5 times of your buying power. In this example, you can buy up to 1.25 million. But are you going to use the full 1.25 million because leverage is a risky endeavor? So what you could do, potentially, you could actually just get a tactical allocation, especially if, let's say, you do not have any exposure in Japan. Consider making, let's say, $300,000 investment, which $300,000 divided by 500,000 is 0.6 times of your portfolio value. So you invest into a dividend paying fund like the 𝗍𝘃𝗀 Japan Dividend Equity Fund, and from the dividend, 7% minus 1.5%, that gives you a yield of 5.5%. Now, in income terms, you are generating potentially an annual income of $16,500 or 1.3K per month. And this is at no additional capital outlay. Sure enough, you can generate 5.5%, but you have to cough out the additional $300,000 from somewhere, either from redemption or you need to transfer in. From this, you are able to leverage your existing investment currently, and you can execute this strategy immediately. So what I've just mentioned is a yen carry trade. Actually, yen has always been a popular funding currency for carry trade due to Japan's historically low interest rate. But many have actually utilized yen as a borrowing currency. So what they do is they borrow yen, okay, they invest into USD bonds. So this actually exposes borrower to inherent FX risk if yen appreciates against USD. Now, if you look at the chart in hindsight, it could be a good idea for you to actually borrow yen to invest in the other currency products. But let's do a case study. Let's say if you entered at the wrong time. So if you entered into end of 2022, you borrowed 1 million USD to invest in yen equivalent to borrow into a USD bond. What you have actually, over that 3-month period, actually yen appreciated 15%. So your 1 million US dollar now is now $1.15 million. That is an instant 15% FX loss. Okay. So for you to score the right goal, yen carry trade, do it the proper way, which is to borrow in yen to invest in yen. This mitigates the unnecessary FX risk as mentioned earlier. So even Warren Buffett is doing this. Okay? Warren Buffett actually saw great value in Japanese equities, especially in the industrial segment, and he invested using margin, using a yen carry trade. Instead of converting his USD cash, he actually issued yen bonds. So he issued yen bonds at 0.5%. He invested in the 5 of the trading firms, paying 5% dividend yield. So aside from this positive carry of 4.5%, he was able to generate total returns. Some companies even have a 3x return. So therefore, they describe this trade awfully easy money. Even the late 𝗪𝘃𝘃𝗀𝘁, he actually said that it was as though God opening a chest and pouring money into it. So this actually tells you that how much money they have actually made from this Japan trade. And earlier this year in their annual newsletter, Berkshire Hathaway, Warren Buffett still expressed optimism in Japanese equities. And they have issued more yen bonds. They are looking to deploy potentially fewer more investments into Japan. Now, so the first part is really about how you can, what's the upside and how do you score a goal. But in this event, I think it's also important to talk about risk management. How do you be a good goalkeeper to defend against leverage risk? Because you're talking about borrowing money. So it's important to talk about the key leveraging risks. Essentially, we have highlighted 3 key leveraging risks. Market risk, how do you deal with the market downturn? Second, the cost of borrowing, which is interest risk. What happens if your cost of borrowing increases? Third, currency risk, if there's any fluctuation in FX risk, which could impact your cost of borrowing. So the first risk, excessive leveraging, I think it's common sense. It poses a significant risk which should be avoided. So we do not advocate for anyone taking on excessive leverage risk because the likelihood of reaching margin call increases exponentially. So the key is actually not to over leverage, but how do you identify a prudent level of leverage based on your existing portfolio? So as a general rule of thumb, your loan amount shouldn't exceed 60% of your collateral value. This provides you with adequate buffer to cushion for any margin or downside risks. So luckily, here today, you are joined by your friendly advisors, investment advisors, IGM and FSM. So after this session, you may find them to actually talk about your portfolio allocation sizing and what is the prudent level of leverage to take on. Now, interest risk, I think some of you may have read the news. The Bank of Japan actually hiked its rates in 17 years. They ended its negative interest rate policy. I think the first question that on the top of everyone's mind is what happens if my yen cost of borrowing increases? Now it's like 1.5%, but what if 5 months later, 6 months later, it's 5%? Now, to address this, actually this is pretty much in line with most of what analysts have been talking about, because Japan is finally experiencing inflation for the first time. So Bank of Japan actually said that financial conditions will remain accommodative, meaning they want to keep the rates low, they want to spur growth, spur employment. And you have to bear in mind that their initial rate hike in 1989 actually caused the economy to spend 30 years in a deflationary environment. So what our team actually anticipate is that it's a slow, gradual rate hike, okay, maybe a couple of months, few basis points. It's not going to be too impactful in impacting this strategy. So there's a buffer of 5.5%. So, but more importantly is there's no lock-in. You're not taking a bank loan of 3 months, 6 months, right, where you have to lock in the interest. So there's full control, so meaning you can sell off as and when you like if it doesn't make sense anymore. So investors always have the full control when you're talking about our margin loans. Last but not least, currency risk. Is there a currency risk? You are borrowing in yen, investing in yen. It is a currency neutral trade. So therefore, it mitigates the cross FX risk. In fact, it's actually an opportunity. Our research team believes that when a yen turnaround will be happening, maybe short, medium term, not so long, but eventually, if there's a yen turnaround, what happens is that it will benefit investors who opt for an unhedged share class. Like if you're investing into a yen share class, is actually beneficial because when yen turn around, you convert your proceeds to Sing, you will have more Sing dollar. So let's say your dividend payout, okay? Two ways to go about it. When you receive the dividend, you could aggressively pay down the interest, okay, to lower the effective rates, lower the effective interest costs. Second option, you can repay the interest component only, and you may hold yen in your cash account. So you can just wait for yen, if it's turned around, you can actually convert to Sing. Or if not, many of you, I believe, are going to Japan this year, you can take advantage of the current cheap yen by spending on FSM or IGM debit card with attractive FX rate. Yep, so that's one of the opportunity. So now let's run through a quick case study. So this is actually a working strategy that actually many investors have actually been buying into. So initial portfolio value $1 million. This client drew down, make a drawdown of $600,000. So it's 0.6 times of their portfolio. They are not even leveraging 1 times or higher, right? Just to have this investment income. So generated 4 months, cost entered in February. So 4 months, maybe a bit small, but 4 months total around 1.5 million yen. So minus your cost of borrowing, 355,000 yen. Now, what is the net gain? It's that 1.2 million. And based on current rates, it's around, current exchange rate is around 10,200, and which equates to around $2,500 per month. And if there's an element of yen turnaround, what happens when you convert to Sing? You will have definitely more than that, what you see here. Okay, to pair with this margin strategy, you will need a reliable margin facility. Over the next few slides, I'll just share with you why our margin facility is able to suit your needs. So first, if you are familiar with opening a margin account in the bank or something, you have to, it's a very cumbersome process. You have to sign copious amount of forms, you provide your payslip, your NOA, just for them to process days to give you to open the margin account. So iFAST, the reason why I put a video here is because it's 7 seconds. That's how long it will take for you exactly to opt in. As long as you are an accredited investor, system will detect that, and you can opt in immediately. So you don't have to open an additional account. It's instant approval, and you can do a same-day margin drawdown. Secondly, rather than doing on the product level, our margin is on the whole portfolio level, meaning it's a multiple asset classes. You have stocks, ETF, bonds, great. We'll give you a unified margin buying power as a new payment method. So when you're placing trade, you're able to select a new payment method called margin. But I think more importantly, how does this impact you is that you may have different asset classes. If one asset class is underperforming, you may have the other few asset class to cushion for it. So this offers enhanced protection rather than open a separate account for different product. So if you are familiar with margin and if you are doing a cash withdrawal, you realize it's very cumbersome. You have to submit cash withdrawal forms every time, then they have to review and process. So iFAST, you can do it exactly the same way you're doing now. Withdraw cash, okay? We just show you a maximum withdrawal amount at which the limit that you won't hit a margin call at. And cash loan repayment is also simplified. You can repay at any point of time using your cash account, same currency cash account, or other currency cash account. And also, it's a very simplified view of your account margin status. Everything is transparent, so including daily interest charges, your loan amount that was being made, and what is the repayment amount that you made, and what is the risk level currently. So after you opt in, you'll receive this new page called Margin Summary. Now, key takeaways today. So just 3 key points. You may invest into Japan with no additional capital outlay via this yen carry trade into Nikko AM Japan Dividend Equity Fund. And while leverage can be a powerful tool for investors, therefore, I think we have actually imparted what are the ways to mitigate the margin risk. So risk assessment is necessary to mitigate this kind of margin risk. And thankfully, your advisors are here as well. So you can approach them, feel free to approach them. So our margin facility offers investors with the full flexibility, instant opt-in, instant margin drawdown, for you to capitalize on investment opportunities whenever the need arises. So I'll just end the slide here. So you can declare as AI today, accredited investor. So aside from accessing to product financing, you also have access to fractionalized bonds trading, as well as restricted funds and other private placement, closed door events. So if you visit our booth at the corner on the left-hand side, so you can receive a $20 Amazon e-gift card. upon every opt-in. So if let's say you need time to declare AI, we also give you 1 week of grace period. Yeah, so with that, I'll end my sharing, and yeah, please visit us at the booth. Thank you so much.